yeah, you can go buy the car when you're 23 years old. I did the exact same thing. And it's like, it's so much nicer now when I have long-term investments that can actually do things for myself, the people around me, my businesses. It's so much more like gratifying than going out and buying that car and driving it around for 6 months. And you can do so much more with it.
What's up, everybody? It is the Sam Taggart for the first time in a long time being the host, which is actually fun. So nice. I just want to thank and honor Hunter. Guys, I don't think you guys realize Hunter is one of the coolest hosts. So if you've been listening to this podcast, he is an OG 10-year vet, in door-to-door and runs our marketing now. And he's been just doing awesome with these podcasts. So big shout out to Hunter. And anyway, we're back in the studio here in Utah, and these guys flew in from Colorado. Man, where do you live?
Colorado Springs.
Okay, Colorado Springs.
Yep.
And what's fun about this podcast is we have veteran door knockers and tech and stocky, and it's going to be a mix of everything. So if you're wanting to make a ton of money and make the money work for you, then you're going to want to listen to this podcast. That's what I'm getting at. And I'm going to go over a couple little things we got coming up. So whenever this comes out, we got DoorCon Canada, September 27th, 28th. We got business boot camp end of August. We got another sales and sales leadership boot camp, 2 different boot camps in October. We've got our mastermind trip coming up in Iceland. So those are in our inner circle, which these guys are coming to Iceland. Yeah. We got DoorCon in January 23rd, 24th. Save the date. Want to see a lot of these guys up on that stage in Golden Door. We got so many things coming up. And if you guys have not seen D2D 2.0, which we revamped everything, launched that a few months ago, go check it out. All new solar content, all fiber, all alarm, all solar, all roofing. It's freaking sick. We put hard in the last 18 months revamping everything. So go check that out. So there's my quick infomercial. Now we're going to get into the meat and potatoes of the DD podcast. And we've got Cypher in the house with Matt Fair, Garret Myers. They've been in our mastermind for a while now, and it's been just so fun to get to know you guys, whether we're shooting guns or we're freaking dinking around. And so tell us a little bit about what is Cypher real quick, and then we're just going to get into how to help people make more money and maybe a little bit about your backgrounds. Let's start with you, Matt.
Sure. Yeah, absolutely. So Cypher has been around for about 2 years now. And
Garret, kind of longer, but officially 2 years, right?
It's been being built for quite some time, but officially 2 years on the market. So that's how long we've been around. A little bit of background on me. Me and Garret have been friends since we were kids, and then didn't speak for years, and then kind of reconnected, decided we wanted to build some businesses together. So that's how me and Garret came to be in business. Garret's been in door-to-door for years, which is how we got hooked up with Sam. And then about Cypher, so we really wanted to cater to the door-to-door space because it's something that hits really close to home for Garret and one of our other partners. They've been in this space for years. And we wanted to be able to make sure that the guys were making money even when they're off the doors, getting those dopamine hits. We've all been in sales before, you get that little rush. And so that's why we brought Cypher to the door-to-door space.
So Garret, explain to us a little bit, what is it?
What is Cypher?
Yeah.
It's very mysterious.
Yes.
Everyone wants to know. Cypher is very simple. Cypher is just an investment platform that's built and born out of the door-to-door space. Like he was saying, so I come from door-to-door, which we can get into that later. But I think what really matters here is what Cypher is actually doing for people that are in door-to-door right now. Cypher is an investment platform. They tie our software that we build into the money that they're making in door-to-door, and it just multiplies that money. So you have $1, and then it makes 2, 3, 4, 5 little more baby dollars for you, right? While you're out on the doors, you're pounding the pavement, and it's like he said, it's nice to know that even on those days you've had them, just bad days on the doors, you're still making money, and that's the goal behind Cypher. So. It's somewhat educational in some ways, but more than anything, it's an investment vehicle. It's an alternative investment vehicle. So we're all aware of real estate, right? We're all aware of oil and gas. We're all aware of crypto, right? This is alternative to that.
So if you're making money in sales, The issue, and it's funny because I want to talk to you a little bit about this. Everybody, like when they first get into sales and they see that they're successful in sales, there's that like, oh my gosh, like this almost like addiction, like, you know, you just go crazy. You're like, I was making 50, now I made 150.
Yeah.
And what do most people do?
Blow it. It's gone.
Blow it.
And because of the first taste of money, they're like, I'm gonna buy a sick car. And I'm like, you just
Ford Raptor, let's go.
Yes. Yeah. It's like, you know, BMWs, Teslas, and Fords I see, you know what I mean? You're just like, what the heck? And then after 2-3 years and you still have no money, even though you made a lot more money, you're kind of like, oh, I should probably do something about this.
And then you get to the question of like, where do I start? Do I go buy an Airbnb? Do I don't know anything about stocks. Do I buy Bitcoin? Like, what do you do? And that's exactly why we made Cypher right there. It's for the guys just like us at one point in time. It's like, we were smart enough to know that we should be investing and too dumb to know how.
Yeah.
And so that was the gap that we were trying to bridge.
So here was my strategy for many years. I had a Robinhood account.
Perfect.
And every 2 weeks, I'd put $2,000 into the Robinhood. It would just automatically enter into the Robinhood. So I'd forget I do that. And then every month or two, I'd log in. I'm like, oh yeah, I got like $7,000 sitting in the cash in my Robinhood.
Right.
And I'd be like, well, Apple, Google. Like I was like, I don't know effing stocks. And then I picked some randos that were like, this one says it's going up. I don't even know anything about the company. I was like, well, bet on that one. And I felt like I was this like complete gamble of roulette of like, okay, let's pick the ones I know. And then let's like on the thing, it's like recommended big hitters. And I didn't realize that it was like, oh, that's because they just had their spike. So I'd buy it at the highest.
And then sell it at the low. Great investment strategy.
I was like, oh, this is so bad. I'm like, I lose every time on this. And it was just so dumb. But what I do like about stocks and things like that is that it is liquid, right? So there's been many moments that would get up to 200 grand. And then all of a sudden, somebody come to me with a good real estate deal and I'd be like, oh, I cash out all my freaking liquid. I'll put it into a real estate deal. But the issue is most people don't have the discipline to get up to $100,000 minimum investment to put into real estate. Yep. They never get there.
Correct.
And then they're sitting there like, I want to get into real estate. And then they're like, oh, but I don't have the money to get into real estate. So you need a down payment or you need to get a mortgage. And you need the
time to go research that. You can't just go jump in the real estate market. You know? Like you have to actually know.
You have to know what you're doing.
Right. And so that takes a lot of time. And most of the guys that are in the door space, they're pounding pavement. You know, all day, every day. Like they don't have the time to sit there for 2 weeks and go take some real estate course and, you know, try to learn about Airbnb.
Even if they did a 2-week real estate course, they're getting their ass handed to them to guys that are doing it for 10 years and have all the better deals and better like, you know what I mean? It's just, it is 100%. What it is.
And it's very hard on the emotions too. I mean, Sam, you've probably experienced this. Like when you win, those wins are really high. And then when you get your account crushed, if you lost your 100 grand because you bought Apple and then, you know, whatever happens with the iPhone and you lose that, those emotions take a toll on you.
Or Bitcoin when it's like, we're making hella money and it went all away. And then you're like, it's just a roller coaster.
So that's what we try to do. We try to eliminate that emotion. So we don't want you making bad trades based off of emotion. We don't want you on these super high highs and super low lows. We just want you on those highs.
Love that. So essentially, for those listening, the conversation is going to go down the rabbit hole of money. And everybody has a different relationship to money. And I'm curious, like a little bit of your backgrounds of like how you grew up. Like, were you rich? Were you poor? Were your parents like good investors? Like at what, like, you see what I mean? Like I want to talk about the relationship to money.
Gotcha.
My relationship to money was almost non-existent because I had no money growing up, like absolutely none. So it was difficult to have a relationship to begin with. So yeah, growing up, definitely, as they would say, came from a very humble family. Right. And so that being the case, I actually had some hurdles to get over. I had to learn money. I absolutely had. And to this day, I'm still learning money. I think it's going to be something I learned for the rest of my life. But come from no money, had to go out and grind, got into door to door, had to go out and grind, made a ton of money, lost a ton of money, and then had to remake that money again. And, I think my relationship to money has absolutely changed and evolved. I have a ton of respect for it. And it's one of those things. It requires attention. It does require care. And it requires being around other people that share that same ideology.
Yeah. And you probably, I think like every other salesperson, they go through that, those journeys essentially. And as you wise up over your career, it's like, hey dude, I promise you're going to like having some safety net and security and not being so risky. And not blowing it on a bottle service and a car and this and that. You know what I mean?
Dude, I bought all the bottles. I bought the cars. I bought all the vacations. And now, if we're just being very transparent and very humble right now looking back at my younger self, my 22-year-old self, I wish I'd done way less of that and had actually taken the advice of people on podcasts like this that were like, hey, be smarter with your money.
Well, how old are you now?
36.
So think about this, guys. 22, he's knocking doors. He's 36 now. Let's say you made it. I'm sure you had many years. You made over 6 figures. You know, and now you run one of the most successful teams at Solar Pros, which is probably one of the biggest solar companies in the country, if not is the. How many reps do you guys have?
A couple hundred.
Guys, think about this. Like, he's not just talking. We're not talking money. We're talking. He's built couple hundred sales rep organization. So the overrides, the sales, the leadership, all the things that have come over a decade of experience. The hardest part is how do you beat that into 23-year-old's head of compounding interest?
Yeah.
And this, like,
I was like, compounding what?
Yeah, like you're 23, you make $100,000. That $100,000 invested over a decade now is worth what in a thing like Cypher?
Yep. So over the
do that, man.
If you were to let's scale it back.
Well,
can we do that?
Yeah. Let's scale it back because
can we just take
10 grand? Yeah,
$10,000 investment over the course of even just 5 years will turn into $150,000.
So, and it's funny you asked that, Sam.
Isn't this crazy?
This math with my daughter. I have a 14-year-old daughter, and so she was asking me the other day about Cypher. We're sitting there on the computer, and she's 14 now, and she was like, "Okay, Dad. So if I took $100,000 right now when I'm 14, how much would I have when I'm 18 years old?" So we sit there and we do some math, and on our current numbers, it was like if my 14-year-old daughter took $100,000 right now, by the time she graduates high school at 18, she would have had $1.25 million off that 100K with Cypher from 14 years old to 18 years old.
It's just time.
It was just time. And it was just crazy to think about that. So like even for my daughter, let's say she got an inheritance from grandma for 100K. And it was like, so she could be 14 years old and just take the 100K, sit it there, no knowledge, no anything, put it with Cypher. And then at 18 years old, come out a millionaire.
And set for
That's
most of her life, like the life decisions, the change, the access.
Sure, she could go to college and pay for it up front and not be stressed about it, you know.
She could get a house, be fine. She could pay her mortgage, never have to really worry about, you know what I mean? A lot of things.
So you asked a good question. It's like, how do you explain that to your 22-year-old self? We all made great money like in our 20s. And I did the car thing and the vacation thing. And I really wish someone would have grabbed me by my neck and been like, hey, what are you doing? You know, you have plenty of time, because you'll do that when you're 23, 24 years old. You'll spend all that money, and then 4 years down the road, you're right back to day one. Got to get out there and start grinding again, you know, because you bought the car, you bought the bottles, and did all of the things.
Well, no, but the managers and the owners listening to this, I'm sorry for training your reps a little different right now, because a lot of owners and managers have the mentality of keep them broke. If I can get them to buy the bottle service and buy the cars and then give them that example, which is a terrible way to lead, in my opinion, then they have to keep selling.
Right.
So that's actually
a retention tool.
It's a great retention tool.
I think it's actually a nightmare for managers because who wants to actually manage a team of nothing but broke sales reps? Talk about an emotional roller coaster. Stress.
I need an advance. I need an advance. I need money.
Advance is nonstop. It's not fun. What is fun is actually having stable, mature, financially literate salespeople.
100%.
And you guys correct me if I'm wrong, but especially in the sales and the door-to-door space, I have never met anyone to come out of that space who wasn't always still wanting to grind. So they could have investments. They could be crushing it, tons of money in the bank, all these different investments. They're not sitting on a beach in Aruba. Like,
no, they
can't. They can't. It's not in them. So I think the managers, you know, they should take a step back. Even if your guys get rich, I promise you they're going to still want to get out there and work.
100%.
Yeah, it's not. So also to this point, because you sort of brought up like numbers and such earlier, I don't think managers should necessarily be flexing the amount of reps they have or sales count or anything. They should be flexing the quality of sales reps they have. They should be flexing the amount of success they have brought to those people.
I love that. Yeah, it's like, you have a body count or do you have realness out of it? You know what I mean? I love that. thanks so much for listening to the D2D podcast and being such a loyal listener. If you haven't subscribed already, hit that subscribe button. And we have finally come out with a 2.0 to our D2D University. And we want to give you free access to our community where you can peruse around different micro courses to big pro and apprentice certifications. Whether you're in pest, solar, roofing, alarms, fiber, all these different industries have an amazing refresh of brand new content we spent the last year redoing. Why? Because we believe in leveling up this industry from ethics to mindset to skill sets to all the things that's going to make you an actual pro at doing this door-to-door job that we know is super difficult, but it's the same effort, but greater results with DDDU 2.0. Go to our website and get access today. Yeah. So here's the next question. So let's take the non-traditional. This is kind of an interesting way. It's like algorithmic day trading. We've all heard of day trading, and there might be people listening to this who've tried it, bought the course, but the problem is the human day trading is emotion. We make all decisions. We know this and we're in sales.
Yeah.
You can get somebody emotional, they buy. The problem is the stocks get us emotional. So you're taking stocks and you're day trading it with no emotion because you're just trying to make micro wins on a daily basis, and you take that on a monthly basis, it equals a decent return on the time. But if I'm trying to make, let's say 0.25% a day, that's a lot over a year. You know what I mean? Where the goal of an investment would be if I can make a guaranteed 10%, a guaranteed 15%, that's like killing it. But if you're like, cool, I'm going to guarantee a trade of a 0.25 or a 0.1 a day over a month, that's 10%. You know what I mean? And it's like, so I think that's what, to explain what Cypher does is they say, let's take the human out of it and let's just automate through an algorithm the trades for you. And then it's not you getting taught how to day trade, but still having to do it, wake up, be disciplined, have the emotion. It's just you set it, forget it, and just like check on it, make sure it's doing its thing and trust the process.
Correct.
And that's Cypher.
Yeah, and you pretty much hit it on the head. And to add some clarification on top of that, because we always get this question all the time too, like, can I lose money in this? Absolutely, you can. You can lose some money, you can lose all of your money. That's the risk disclaimer, right? That has to be put out there. Now, I like to liken it to a car. If you drive in a car, can you get in a wreck?
Yep.
If you drive really safe, does that mean nobody can hit you? You can still get hit, right? It's still possible. But are you not going to buy a car?
Still going to buy a car.
Right?
You still got to invest.
Absolutely.
Every investment's a risk.
Everyone. Real estate's a risk. Crypto is a risk. Oil and gas is a risk. Everything is a risk. And what we have done with the software is we have literally spent, so like you said, officially we've been available or around or somewhat known for the last 2 years. But we've actually been building the software for the last 6 years. And so we've stepped in and we've taken a deep dive into how to mitigate risk as much as possible. And so for the people that are maybe wondering our stance on this, there's different risk tolerances for everybody. And they have the options in the software, which we educate them on. And we're happy to do so. We'll do it over a call for them. But we want salespeople, we want our salespeople to actually be successful and to win. So going back to the point you were making, we've removed the emotion from it, and it's just purely algorithms at this point. All logic, no emotion.
Why do you think people spend money versus invest money? Like, where does the decisions be made?
It's easy. It's instant gratification.
Yeah, I was about to say.
It's nothing more than that. Like, you go spend money, you're going to get something immediately for it. If you invest something, you're not going to get it now. You're going to have to wait a year, 2 years, 10 years.
So how does one change this whole addiction to instant gratification?
I mean, I have an answer for that. I think it's a few things. I don't think there's one thing. I think one, it's having the self-discipline to do so, right? It's hard. We all know that a lot of the things we should do for ourselves are hard to do. It's a good indicator you should do something. Waking up to go to the gym in the morning is hard. Might not feel like it, but you kind of know in the back of your head, I should go do this, right? Having the discipline to do that, having the discipline to actually be wise with your money and not go buy that thing you want for instant gratification. We can justify anything we purchase. It's sales, right?
It's a tax write-off. It's like that.
We're the best salespeople to ourselves.
Yes,
okay?
100%.
What's hard to do is to say no to yourself. and instead take those funds and invest it in whatever investment you're looking at. Ultimately, that is what you should be doing.
Love that.
Yeah.
What about you, Matt?
Yeah. The delayed gratification part, I think, is huge. And that's something that I personally had to learn for years. But there's nothing good that like happens instantly, right? Like you've spent how long building your business, and you've spent how long building up your teams. And I did the same thing. And so things that come along quick typically aren't the things that are worthwhile. I can go buy a car tomorrow, right? And like spend $100K, you go buy a brand new car. And that's great, but it's very fleeting. That car's gonna last you a year, it's gonna get wrecked, get hail damage, whatever. But if you were to take that 100 grand, invest it into something, like it's gonna be so much more worthwhile. And so the gym, I like how you brought up the gym. I used to never work out. I was super skinny. It just wasn't my thing. Never worked out. And the first day you go to the gym and you're like, this sucks. The second day you go to the gym, this sucks. The 30th day you go to the gym, still sucks. 6 months into it, someone's like, man, your arms look good. That doesn't suck so more. And you had to put in that 6 months of, dedication, time, effort. You're getting no return out of it, nothing at all. And then 6 months or a year, 2 years into it, you look great, you feel great. And so I picture investments the same way. Like, yeah, you can go buy the car when you're 23 years old. I did the exact same thing. And it's like, it's so much nicer now when I have long-term investments that can actually do things for myself, the people around me, my businesses. It's so much more like gratifying than going out and buying that car and driving it around for 6 months. And you can do so much more with it. So instant gratification is probably, in my opinion, like the biggest downfall to young guys who are killers, who are making a ton of money. That instant gratification, it's low-hanging fruit, and it's not worthwhile. It's not sustainable.
Yeah, it's interesting. It makes me think of just kind of like, why do older people tend to be called wisdom? They've had all these experiences and they're a little bit more risk adverse. You know what I mean? You think about it. And I think it's probably because they all had to go through their own lessons and they're like, man, I wish I would have had. Right. And I think if you go through enough of these losses, or man, I bet on this, and if I had an extra 100 grand today, I wouldn't be trying to freaking sell my house, second mortgage on it, and I can't pay my bills, and I'm 45 and I got 3 kids.
Yep.
Where when you're in your 20s, that like making a mortgage payment isn't, and putting food on the table for 3 kids is not like your freaking stressor. You're not like sitting there going, man, if I had an extra 100 grand from when I was 20 and blew it on something stupid, oh my gosh, I'd feel, you know what I mean? And now when you're 60, you're like, I've had to go through that, and that. And I'm like, it's just not worth the emotional stress, the year of my life having to go through 3 mortgages and work an extra job at night to get myself out of X hole because the economy crashed and I've been through a crash. You know what I mean? That's like, hey, you can't ride the crest forever. You're making tons of money as a door-to-door guy today, but in 10 years, you're going to still hustle like you did 10 years prior. You know what I mean? Are you going to be willing to go 8 hours a day, all day when you got 2 kids and travel every summer? You know what I mean? Like, and I think this is where people can't have the foresight and they're not thinking that far. And I'm like, I'm here to tell you guys, like, and I think you guys are here to tell. And I think if you were to talk to a 40-year-old, a 50-year-old, and a 60-year-old, they'd even have more wisdom behind this statement.
For sure.
It's, you are going to have a much better decision-making skill, a much more level-headed, a much more calmer approach to life, a much more peace in life if you have passive income paying for your liabilities. Your investments are covering, you know what I mean? Your net worth is the thing to brag about, not your look at my car, which is not a net worth thing.
Sure.
Does that make sense?
Yeah, absolutely. And for the record, I'm not saying don't buy the cars. I'm just saying make sure you have investments and then buy the cars.
Exactly.
I'm a huge car
Let
guy,
your
so
assets pay for your liabilities.
Right, exactly. And you can get to that point, especially if you're a killer. If you're out there killing the doors, you can set this up to where you get both. It's not like you don't get to drive the cool car.
You can have them both.
I promise you do. But let's make sure that we have like your financials in order. Make sure you have some investments out there. Make sure you're doing things correctly, and then get the freaking car.
So let's put financial planner hats on for a second.
Yeah.
You have, in a financial plan, you have assets, which are like diversification, liquid versus illiquid, risk versus low risk. You know what I mean? And then you have tax, which I think is a conversation. And then you just have financial discipline, right? Because I think this is where most people, they're like, I'll set out for a financial plan. I'm like, I could put a sales plan for you too. It's called make 100 grand, knock this many doors and close at this percentage. You can do it. And then you're like, I'll give you 100 grand right now if you don't miss a day knocking the doors. What percent of people actually get the 100 grand? Not a lot. Like if you miss a day, I take away your 100 grand. They're like, they fail after a week or two. And it's like, there you go. That's your problem. Is it a person problem and a discipline problem? Is it a financial strategy and an allocation, or is it a tax plan? So let's go into the financial plan of a bucket. Seeing people with net worths that are really well, seeing what you guys do. It's not the only investment, right? Obviously, it's a cool liquid investment. So talk to us kind of what financial plan or approach do you advise your salespeople, or have you seen working in our industry and work?
So I love that question, actually. And I feel like for some reason this needs to be in here. This is not financial advice.
Yeah. We're just three stupid dudes that happen to have money talking real for a second. At your own risk. Cool. Yes.
Got that.
And disclaimer. Sweet. So, and I think this should be really, really clear, because this is obviously a podcast and we're here with the Sam Taggart and talking about Cypher up here. If somebody came to me and was like, hey, I have 100 grand, should I put that all with Cypher? And that's my only investment. The answer is no. We want to also be very transparent with people that we work with. I fully believe in diversification. My own personal investment strategy is very diversified. Very diversified. I'm in lots of different things, primarily real estate, crypto, obviously algorithmic trading, mining, and even movies at this point. So
cool.
Very diverse.
I got pitched on a movie and I was like, I don't know anything about this. I'm not putting money into this.
It's a whole topic, something we could get into. But yeah, I think if you are newer into your career, you're just starting to make some money, you absolutely do need to diversify. You need to educate yourself, hands down. Like that's probably the first foremost, most important thing you need to do.
Well, let's go back to this. I knew nothing about movies. I've been pitched twice on investing in movies. And my simple thing is, I will not give you money until I know enough about movie investments to feel good about investing money in it. Does that make sense? And that was my simple rule. So the education, I was like, if there's a course or some literature or some like coach I could hire that would then advise me neutrally, then maybe. But I don't even want to spend the time doing that. And so I was like, sorry, no dice. Does that make sense?
Absolutely.
That's a great thesis across the board.
And well, the thing of the movies is interesting, because if somebody said, hey, Garrett, do you recommend investing in movies? My answer is simply, it depends.
Depends, it could be a great investment.
But to diversify, I mean, that has to be part of your strategy. But for the younger guys that are watching, I would say, like, absolutely you need to be diversified. But the very first starting point is just to invest and to do it safely. So in poker, there's a term called tilt. I don't know if you guys play cards, but it's like once you start to lose hands that you shouldn't have lost, start to get a bad demeanor and a bad taste in your mouth about playing the cards and make stupid decisions. So I would say for the young guys, you'll work your way into diversifying, but that first investment, do it in a really safe vessel and something that you educate yourself on.
Smart.
And start there. Get a good taste in your mouth.
Yeah, because you're like, oh, cool, winner. Investing works.
And it does. It really does.
I have a bad taste in my mouth right now, so I am in tilt.
Sam lost some money this week.
I am in full tilt right now, bro. We will not go down this rabbit hole for a second, but let's go.
Well, and exactly. We don't want the young guys to start with that.
No,
so
I've had many wins.
If you don't know anything about movies and you're like, man, I just got my first big paycheck, I know I need to invest, don't go throw it into movies, or don't go throw it into some platform or real estate if you know nothing about real estate. Find a good, safe vehicle, invest the money, when you're a young guy, and then start to diversify. You can get a little bit more risky from there once those investments start to pay out. So that's what I would do if I was young. I wish I could go back and tell myself, like, hey, take this little bit of money. Who do you know? Who's in the network? Does your dad have some information? Maybe your buddy does.
Yeah, that's great.
What's a decent, safe vehicle to put this first paycheck in?
And the second somebody says, I'm getting a 30%, a 50% return on your money, you just run. That is not your first investment. Yeah. Does that make sense? Like
for sure.
And you're going to be like, yeah, but it sounds epic. And I'm like, yeah, but it also probably has the highest risk. If it was such a good investment and it was 50% returns, don't you think Warren Buffett and everybody else in their effing dogs would be like, hell yeah? Don't you think that if it sounds too good to be true, sometimes there's some truth behind that. And I watch people, if I'm not making 50% on my money, like X crypto because my friend made, and it's like, Yeah, but that always isn't the case for your short little term brain to see. And then you have a bad taste.
Right.
And then it goes wrong. And then you're like, I'm never investing again.
Yeah. And that's a great point. Like, let's talk about what not to do. So if you're getting a bunch of people offering guarantees, I guarantee you, Sam, you're going to make 75% in 2 years. I haven't ever seen those investments. I don't think Warren Buffett has. Like, there is not guarantees in investing.
Yeah.
There is safe vehicles to do it. And when we say safe, we mean the safest possible for investing.
100%.
But if you're 23 years old out there and you're like, man, I just got $50,000 over the summer selling pest control, don't go jump on Instagram when someone's promising you you're going to make 200K over the next 12 months on your 50 grand.
My philosophy on investing is actually very similar to selling. Okay. As a salesperson, specifically in door-to-door, you're not going to go out and knock doors for a day, close a deal, and then just assume now you're going to get paid from that one deal you closed. You keep knocking. Okay. You get another sale, another sale, another sale. At the end of the week, you got 5. You know a couple of those are going to cancel, right? But you still have 3 that are going to go through.
Yep.
And that's what investing is. You mitigate your risk, spread out counterparty risk. It all goes away. And at the end of the day, I think that's probably one of the best strategies is to just spread out your risk.
So I'll give you my simple algorithm, everybody. Ready? So you have liquid versus illiquid. You should have your cash in your bank account, which is the worst investment you could have, right? Interest on cash in bank. It's that needs to be at some point where it's just like immediate, but it's low enough. I need to have low cash in the bank to where it's almost scary that keeps me broke. That's my thesis. That's my keep me broke. Man, I only got 10 grand in the bank. Guys, I'm telling you, in my personal bank account, I won't have more than 10 grand. Well, still to this day, people are like, you're crazy. I'm like, yeah, I have a business and blah, blah.
Well, and it's not just sitting there. You have inflation. So you're literally losing
money
of the money if it's sitting under the mattress.
So if I have more than $10,000 in my personal bank account, guess what happens? I go move it into a liquid investment that would be stocks, algorithmic trading, something I can access to the point where I'm like, I've got 3 months or so worth of living expenses. If shit hit the fan, I need to move something like that is liquid, guaranteed. Don't mess with that. Now I let the liquid grow, and then there's illiquid where, and now you kind of go into real estate, private equity, your movie. You can't just call your movie guy, hey, I need my money back tomorrow. It's like, this isn't it until we sell. That is locked up. It is like getting your money out of a movie is impossible unless they sell. Getting your money out of real estate is like, this could be a 6-month process.
Or 6 years.
Or 6 years, depending on the deal. Like it's not just like, can I get my money out? No, like you got to sell the thing and you got to sell it at a good price, all those things. Yeah. So now you got to say, but the cool part is that's a trick to keep me broke. It's like that money's there, but it's not. Like I can't just go spend it this weekend, right?
Sure.
So I try to put my things that I know I want to grow long-term in illiquid. And then short-term, I like to play I have access to short-term liquid and then I have long-term illiquid, or it's liquid, but I can't get to it. Meaning don't give me the login to how to withdraw it.
Right.
Almost be like, hey wife, change the password on this and never show me. And that is my guaranteed liquid, but not accessible money, which this algorithmic trading would be a great version of that. Don't touch it for 10 years and see what happens. Hey girl at 14 and 18. But if she's checking it every day, being like, oh my gosh, I made $5 grand today. Like she's gonna be like, I'm gonna spend that $5 grand. Yeah, shopping spree. And I'm like, no, but next week you lost $4 grand. Like, you know what I mean? It's just, so I think this is where you don't ever log in. You don't know how to withdraw this liquid money, but it is there.
And that's a great tip for the guys with like high impulse. I see a shiny motorcycle and I'm like,
that's like, 3 months in that vehicle and I got, you know what I mean? Freaking, that is my play. And then you have risk. So your low risk stocks or mutual funds, they're REITs. They're like a conglomerate of 100 stocks into one to delever. And you go with a middle range or low risk mutual fund.
Right.
Boring, predicted. You know what I mean?
Get your 10% a year.
Yeah. And you're like, let's put it into a mutual fund. Now you're like, let's go a little bit more risk. That has more volatility. That would be betting on one company. That would be betting on a stock, right? And so I think that's in that game, right? crypto. I'm going to bet on one. That's the issue is like, okay, I'm going to buy 17 and I'm still minor. There's no mutual fund of crypto. You know what I mean?
Yeah.
Like, and so everybody's getting their ass handed to them on the peaks and
I
valleys.
get my ass kicked in crypto.
Yeah, you're like,
Garrett's pretty good at it.
But it's like, but I had a lock it up. This is my horror story that just happened. Oh my gosh.
Wow.
I gave a buddy 400 grand. I said, lock this up in crypto in 2020.
Mm-hmm.
Okay.
No, 2019.
That's a great time to buy.
Yeah, it's like $8,000 of Bitcoin.
Yeah, that's wonderful.
Yeah.
About 3 months ago. So he would update a spreadsheet. He put it on a freaking hard copy in a lockbox in New York.
Okay.
I can't touch it. It's in a freaking hard copy in a lockbox in New York.
Okay. So he put it on cold storage?
Yeah.
Okay.
So he said.
Mm.
I'm like, last summer, hey, I want to get my money back. It's like 1.5 million bucks. Yeah, I'll get to it. I've just been busy traveling. I got to go to the lockbox, blah, 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 blah. This spring, I just found out, like maybe 2 months ago, he spent it.
Ugh.
I was like,
he
what?
spent
like
your money.
You lived your lifestyle on my lockbox crypto. Where is it? It's gone. I just felt so bad. I couldn't tell you. About 2 years ago, I was in a pickle. What kind of pickle do you need $1 million? Like, so
wow.
if you're going to do a move like that, don't do what I did. Like, you put it on your own lockbox. But the cool part about cold storage, yeah, you're not going to go spend it, but like, go put it in a lockbox. Say, here's the key.
Can I inject
Isn't that
here real
blow
quick?
your mind?
First, I'm sorry that happened. That sucks. There's a lot of stories like that in the crypto space, in the trading space. This is probably a good time for everybody that's listening right now to know we actually never have any access to anybody's funds.
Yeah, that's good.
Any point.
Yeah, you're not giving it to them. You're trading it on your Ameritrade, your brokerage account, which is the reason I'm even going to talk about these guys, because there's for every one of these, there's 9 that they trade your money and their money is touching it.
And your story, and I feel horrible for you, Sam.
Which is what I did.
But
I
we
give
hear
this guy
all the time, and so we really like to emphasize: we don't touch your money. We don't want to touch your money. We don't want to see your money. We have nothing to do with it. And you withdraw and deposit as you wish, and it has nothing to do with us.
And I'm sharing this story because 1, it's a hell of a lot of money.
Yeah.
2, it was a hell of a lot of trust. This guy I'd known for over a decade, like a friend.
Yep.
That just was also an emotional person that was dealing with a hard time in his life that then made a bad decision. Does that make sense?
Yep.
Again, why we make bad investments, bad trades, bad decisions, just in poker. I'm already on a losing effing hand, send it, you know what I mean?
Yep.
You're in tilt.
Yeah.
So I'm sharing this vulnerably, and I'm not trying to call anybody out. Obviously, I've had to have my own meditations and healing process through this shit. But it's like the hard part of but the strategy was sound. Does that make sense?
Yes.
The strategy of I'm not going to effing touch this Bitcoin for a decade was my strategy.
Yeah, you did what you were supposed to do. For
exactly.
Sure. Yeah.
Because I knew that Bitcoin, if I looked at it every day, it was going to do this. And it did. It went to a 17 and then it dropped. Then it went to 16 and then 60 and then it dropped. And just in my head, I was like, I got it at 8. One day it's going to be, everybody's saying 100 grand. Now it's 120. And you're like, oh shit, when I want to go retire, that money on that cold storage is going to be so effing fat. I already know that.
Yeah.
And I think that strategy, most people aren't willing to do. That's what I do in real estate. That's what I did with a liquidish type this. Like, and I think, again, people are trying to be day traders uneducated and they don't realize it's time that they're playing with.
Yeah.
And I was like, man, I had 5 years, 6 years time with Bitcoin where everybody's losing is they're buying at the high, trying to make a quick 3-month turnaround. And then they, you know what I mean? They got out and they're like, kind of just held.
Yeah. Like they say, it's not the timing in the industry, it's time in the industry or time in the market. How long have you held the house for that you purchased?
Because anybody that bought a house 20 years ago, I promise you they have a lot of equity in that house.
Yeah, that's a good point. You won't ever talk to a real estate investor 20 years deep into the home and be like, damn, I wish I sold that 20 years ago.
Well, statistically never happened in the United States.
Never.
Over a 20-year period. So.
And the real estate is the cheapest it'll ever be today, even though you go look at it and you're like, that's hella expensive. You can't buy a house in Park City for more than $1 million.
Yeah.
My dad built his house in Park City for like 300. My dad was building homes for 40 grand in Pine Brook and selling them for 70 grand. He built 60 homes in Jeremy Ranch.
And how much is that house? worth now?
Jeremy Ranch, he was selling them for 60 grand. I asked my dad, I was hiking with him last week. He was like, the developer in Pinebrook, in Park City, could not give lots away. He gave me 10 of his most premium lots on consignment and said, please build homes on this and sell them for me and pay me later.
Wow.
In Park City, Utah, where not a single home is for sale less than $1 million today.
Yeah.
Wow.
Isn't that crazy?
And that was
Did
how
you do
long
it?
ago?
No, this was my dad developing. This was back in the 80s,
Wow.
That's
the late
wow.
80s. Think about that.
That's insane.
And I'm like thinking about this and I'm like, Dad, had you just held on to the 10 he gave you and like never
Right.
sold them, you'd be, and my dad goes back, yeah, hindsight's 2020. You know what I mean? Like, but it's just, had he held,
Right.
like, so you just talk to somebody who's been in the game for a long time and you just, had you held,
Yep.
Yeah.
it will be worth a lot more.
Yep. And so, yeah, the time spent in investing, like it will be worth it. Make good decisions, make solid decisions, get around, good groups, good people, make sure you have good vehicles. But the more time you spend in investing, it's going to work out for you. It's just how it works.
Yeah.
It's just how it is.
So let's take, what about the guy that's like, I still don't know how to make money? Because I think this is the other side of money. There is your ability to make money. And I think this is where many people never move from make enough to live and pay my bills. And so they never surpass, even though they're in a vehicle of sales or even though they're in a vehicle of entrepreneurship, it's almost like they're chasing their own tail forever, playing the game of make enough to live, whatever that number is for you. How does one switch from make more than enough to live in their active income vehicle? Does that make sense?
Yeah, so I love that question. Here's how I teach it. So there's two motivators when it's all said and done. If we boil it down, super simplify things, we are either motivated to get away from something or we are motivated to go towards something. And so what I mean by that is if we use the classic fitness and gym example, one of your motivators can be, hey, I'm the fat kid on the playground and I want to get away from being that. So I'm gonna go to the gym, I'm gonna work out until I am fit enough that I start to feel good about myself. I got away from that and I'm gonna stop there. Yep. So that's one motivator. It's a negative motivator, okay? The second type of motivator would be I want to get towards something. I want to become something that I'm not, and I want to now become Sam Taggart. I want to look like you. I want to get jacked. I want to get ripped. I want to be super capable of running 26 miles a day 3 times, right?
Don't do that, guys. It's stupid.
I now found a new motivation to move toward something. Okay, so one is I don't want to be the fat kid. 2 is I want to look like Sam Taggart over here. Okay, and one of those is a much better motivator than the other. So if you apply that to sales or you apply it to money, one would be, hey, I just don't want to be broke anymore. I want to have my bills covered. I want to make just enough money to be comfortable. Okay, we see that all the time in this industry. 2 is I just want to be fucking rich. Can I swear on this?
Yeah.
Is that okay?
Well, there's I don't know. We're here. We did it.
I like swear words.
Yes. I want to move towards swearing more. Just kidding.
Right. So there's 2 different motivators, and you have to like internally look at yourself and ask, what am I motivated by? And you can change that too. That's the beauty of this. Like a mentor of mine said, hey, for anybody struggling with this, if you don't know like what kind of person you are under no obligation to be the person you were 5 minutes ago. You get to decide the person you are. So if you're motivated by one thing, like, hey, I came from a 9 to 5, I'm just getting into door to door, and I want to make just enough money now to get by. I want to make my car payments. I want to make my house payments, just make sure my family's taken care of. Sure, that's one thing. That's one option, but you don't have to be that person. You can also be the guy or the girl that's like, hey, no, I want to be rich. I want to have a ton of money, and I want to take care of my parents, and I want to help the neighbor down the street, and I also want the nice car for myself. You can have all of it. Just determine what your motivator is.
Yeah.
Love that.
I love that.
Love that.
And I did love that question, Sam. Like, for the young guy who's like, how do I get out of what'd you call it? Like the cycle of like, I go out and I make $2,000 and I got $2,000 of bills, and I make $2,000 and I got $2,000 of bills. I know, like I have a lot of younger brothers. I have 8 brothers. And so a lot of them are in their early 20s and teens. And so they're in that cycle right now, right? Like we've all been there. And I was talking to one of my little brothers the other day. He's 19 years old. And he was like, yeah, man, I would love to invest, or I would love to, do what you're doing, but I make $3,000 and then I spend $3,000 on my bills. And I was like, literally, let's just start with $5. I was like, if you can maybe not buy the coffee for the day, or maybe you can work an extra 15 minutes and clock that extra half an hour or whatever it is. Let's just start with $5 because I promise you it'll start to change your mind. So I told him, take that $5. He's like, what do I do with that? I told him to jump on Robinhood, just pick anything. Just whatever maybe you like skateboards, go find a skateboard stock and just buy $5 of skateboard stock. Just do that one time. And then maybe the next month, do it with $10. And then I swear by the 4th, 5th, and 6th months, you're going to figure out, maybe it's by working more, or maybe it's by cutting your costs. You're going to figure out, how do I use $400 this month? And that will just continue to compound until it starts to reshape your mind. And so it's a really easy way. Like, you're not going to break the cycle in a day. You can't go out and make $10,000 a month if you're only at $2,000 a month. That's going to be pretty difficult if you're already working hard. So like, just start to rewire your brain and being like, okay, I'm going to take $1 and I'm going to use this dollar for my future instead of on the cup of coffee today. And you can just start there. And then I promise you that will compound. In 6 months, you'll be in a different position. In 5 years, you'll be in a huge position. In 10 years, you'll be able to do what you want.
It goes back to the running principle in Atomic Habits. It's like, I hate running and I ran a marathon.
Yep.
That's one thing. Or is it, I became a runner after doing the identity.
Yeah.
So now I identify as a runner, where before I never identified as a runner. Does that make sense?
For
I
sure.
I ran a marathon versus, which that was my I'm listening to Atomic Habits while I'm training for my first marathon. And that hit me because I was like, I hate those. And it was like, listening to that chapter, I was like, oh. And I've now I did 3 in a row in the mountains 2 weeks ago.
That's
you know
insane,
what I mean?
by the way.
But like,
wow.
I was like, well, I've done quite a few now. But like, I now don't literally call my buddy yesterday. I was like, hey, you want to go on a run on Saturday? Like, I became a runner, and whether there's a marathon to train for or not, you'd think like, are you ever going to run again? I'm like, my foot's still kind of hurting and I want to go on a run on Saturday. Like, I became a runner. So it's the same thing with investing. I become an investor. It's like, just because you weren't, like you said, doesn't mean you're stymied or prisoned to the identity in the past. And so my invitation to wrap this up would be, let's become investors. And whether you grew up with a dad, like I luckily grew up with a dad, he also somehow has a weird history of making dumb investments and getting stolen from and bad, you know what I mean? Like, he could tell you the many horror stories. Yes. Yeah. And but he's also made a lot of money. And so I've seen for every 5 sales, 3 are going to stick and 2 cancel. And there you go. You know what I mean? I've watched that in my dad's life, and I've watched it in my life now. And so it's like, I just knew I wanted to be an investor. But some people in this podcast, it's like, you've never had people around you that became the identity of an investor. And so being around investors, thinking different, be the pioneer, be the guy that, like, I became an investor. I put in $5. Yeah. I'm an investor now.
You're an investor.
I have a Robinhood account. I'm not going to tell you how much is in it, but I have a Robinhood account and it's active.
Yeah.
There you go. We started, bro. Like
100%.
And whether you get with Cypher, which I'd highly recommend these guys, I have money in it. It's been fun to watch. Literally, you check on it once a month. You're like, oh, shiz. Like, what the frick? It's so cool. It just does its thing. So highly, really appreciate what you guys are building. And it's like, I've never seen anything like it. It's like really cool. So if they want to get in touch with you guys, how do they do so?
Just straight to our website. Cypherpros.com.
Cypherpros.com.
Yeah, you could probably reach out to anybody at the door-to-door experts as well.
We can connect you
to us.
Yeah. Or if it's just going and getting an Ameritrade or whatever, you know what I mean, account and just starting or whatever. But like, that's my invitation on this podcast is go make more money, to invest more money, to then create real wealth. Don't just go make more money, to spend more money, to then just be in the same cycle. Because the saddest moment is when I go recruit or I'll go train or I see a guy come to one of our events and he's this 50-year-old dude and I go, how long you been in sales? And he's like, my whole life. And I go, and
you know
nothing.
He's been grinding.
And he's, you can see it in his hand. Like, he has the soul of a calloused workman, but in sales. You know what I mean? You're like, how long have you been doing this? 3 decades. And I go, and you're still paycheck to paycheck. And I've seen too many of those people, and it's not to knock on them. And I hope there's a light switch that goes on in that 50-year-old salesman,
Sure.
just like a light switch could go on in a 24-year-old salesman. But I guarantee you that 50-year-old salesman was like, I've had my heydays, I've had my this, and he's like, and I don't have much to show for because I never set myself up for life.
Yeah. So just start. Don't think you need to start big. Don't think you need $100,000 to go buy one Bitcoin. Just start.
I heard kind of one of my closing statements here would be, I heard 𝐿𝐿 say something just recently. God, it hit me really, really hard. It's like, we all have people around us that are pushing us. They're saying, hey, like, go invest, or hey, get disciplined, or go to the gym, like pushing us to be better, right? Especially in this industry. And if you don't, you do need to get those people. But the scarier thought is, what if you didn't have those people? Okay, what if, you know what, hey, yes, you should go invest. Not necessarily in Cypher, in real estate, in crypto, whatever it is, you should go invest. But the scarier thing is, you know what, you don't have to. You can just not do anything.
Yeah.
You can just not go sell. That's fine. You can be average.
What's funnier is there's more examples of that, living examples of those people saying permission to just be average or below.
Yeah.
That's a way more common example to follow.
It's terrifying to me to feel that, like, oh wait, I don't have to be successful. No, you don't have to be successful. That's fine. And I think ultimately that's sort of a thing I would like to convey is we also want to be here to help the people that want to be helped.
Yeah.
And so my challenge to like whoever's listening to this would be like, decide that for yourself, because end of the day, like nobody can push you into success other than yourself. There's people that will help you, but if you're not going to make that decision for yourself, that's fine. You don't have to be successful.
Love that. Same effort, greater results. Like our mantra, all we do for 8 years of my life. I'm just like nugget. All right, you guys are awesome. Thanks for listening. Appreciate you guys for coming out here and being on the show, being in our mastermind, being at the events, being part of the thing. Like I really do. Love it. Okay, we'll see you guys. Much love. Hit subscribe. Share this with a friend. Share this with a rep who's in your office. Share this with a buddy that you're like, I've been trying to tell you this. You need to listen to this. You know what I mean? Like there's probably like a multi-share opportunity right now with this podcast of every person in your network that could bless their lives with maybe a hard conversation. And you don't need to be hard. You just need to send them a link. You know what I mean?
Can we do a follow-up at some point so people can see maybe another podcast at some point? They can see how you've done using this?
Yeah.
Okay.
Throw a screen recording up on a podcast. That'd be fun.
That'd be great.
All right. You guys are awesome. All the love.